Let's take a moment now to delve even deeper into the ever-changing realm of decentralized finance and digital assets, as industry experts are truly exploring the evolving trends and exciting opportunities that are shaping the future of finance. Our panelists today know this better than anyone else. So let's hear exactly what they have to say and, more importantly, establish theirs, our shared priorities for the future. So, in this panel on the future of DeFi and digital assets, we are delighted to be joined by the founder of Axo, Jarek Hrniak.
All right. Thanks, everybody. We're going to be talking about DeFi today. My name's Red. I am a research analyst from Masari, and I'm going to let our panelists introduce themselves.
So my name is Jarek Hrniak. I am the founder of Axo Trading Protocol. My background is traditional finance until 2 years ago, when I finally decided it's about the time we changed the world for the better. So I've applied my skills to Cardano, and we've been on a testnet since the last month.
Good afternoon. My name is Mohammed El Shami. I'm the founder of Scenery Labs. It's a new startup that is focused on building DeFi protocols and innovative Web3 technologies. My background is in tech, and I spent about 10 years in Wall Street building in capital markets and commodities derivatives. Exciting to be here, and thank you for all being here.
Hey everyone, my name is Vineet. I run FinTech at Emergo. My background, I've been in the crypto space for about 10 years now. Was an early employee back at Paxos, where I helped them get their dollar-backed and gold-backed stablecoins. Spent a bit of time in the Bitcoin mining space, as well as started a health insurance payment company, but now back in the crypto space in the Cardano ecosystem with Emergo. Super excited to be on this panel.
Yeah, thanks, guys. So the backgrounds here, a lot of fintech, but they're all still a bit different. So I want to hear, based on your background and your experience, what do you think is the key value prop of DeFi? Like, what is kind of the most important part of it?
So for me, there are three the most important properties of decentralized finance. And often, I really don't like the name decentralized because it's the building block, but that's not what the user wants. The user wants the ability to not to have to think if you have to trust the system. And that's what a good level of decentralization gives you. So the first and foremost is trust. And then after that, what's also very important is the ability to understand how the system works. So the black box design may have worked 50 years ago or 100 years ago. And to be honest with you, the traders yelling to each other on the street had more transparency than we have nowadays. So we went the opposite direction we should with the information evolution. So that's another problem it solves. And finally, and I think that's the most important, all decisions can be done optimally if they're done on a decentralized level. So basically, I, as an actor, can interact directly with the market, and I can talk with my friend, and we can together start a market-making firm, because all the tools are in the open, and all the data is in the open. And my cold start is not 20 billion in capital. It's just me, my friend, and the idea. And that's the, by the way, also origin of crypto, which came from the hacking culture, right? And that's where you get the innovation from. So I still feel it's like an entire sleeping volcano in DeFi.
Yeah, I think similar, the same aspect, the same principles of what Web3 in general and blockchain is about. But surely the transparency being things that is actually built on open protocols that everyone can verify and review, and also, which also contributes to the fact that this space can innovate, the acceleration of innovation can be very quick. If you think about what's been happening in the open banking and all these like financial services standardization, you get things like 20 years old protocols like FIX and all this stuff. All of what we see now is all these smart contracts. They're all there. The infrastructure is there. It's permissionless. Anyone can go and build. And surely at the end here, like beside the fact that self-custody, the ownership is one important property of the future of Web3 in general. Yeah, that's it.
Yeah, I would say the prime value prop for DeFi is accessibility. I think the current financial infrastructure that exists isn't particularly conducive to, I would say, this new global economy that we're built on. And the accessibility of crypto from a, let's say, a payments perspective or a stablecoin perspective is quite massive. And I think that, with the new fears, at least with the United States in regards to de-dollarization, I think stablecoins have really risen to a new level of, I would say, prominence amongst upcoming, like, let's say, developing nations. Like, one interesting thing that I kind of saw with all of this is the way in which, let's say, these newer generation financial services infrastructure companies, such as Circle, are handling, let's say, the new market dynamics, have actually shown us that, they are running these financial operations in a much better methodology than the traditional banks. Because if you look back to earlier this year, where you saw the larger financial institutions such as Silvergate and Silicon Valley Bank collapsing, right? Like, they had about $16 billion worth of capital outflows that they were not able to redeem. But if you look at Circle, that had basically during that same week $8 billion worth of redemptions, they were actually able to service this in a much more efficient manner than the actual regulated financial institutions that existed. So I think it's kind of this accessibility and this ability for people to be able to leverage technology in a lot more faster and efficient manner than what's normally taken place in the past.
Okay, so a few of the things I heard there were, value props of DeFi. We talked trust, we talked transparency, accessibility, but a lot of what people are using is actually CeFi, and we're kind of trading UX and convenience for these key value props. So what I want to ask is CeFi moving us backwards? Is this a net negative or not? I'll start with you, Mohammed.
I don't think it's necessarily negative. It's negative when there are bad actors, but we can't really expect every person out there to manage their keys. And there's this whole, obviously, argument about not your keys, not your wallet. But I do think it's important also to think about the average user, the user experience. And I myself don't feel always comfortable actually putting like a large capital when I might think at some point I'm actually might be losing my keys. So CeFi is not all bad. I'm not personally against it. But I do think that CeFi or those rails need to respect the principles of DeFi. And the regulators also, on the other hand, need to also appreciate what is decentralization is and the open, what's the transparency is about. Actually, in itself, if you think about having this ledger being an open system all entirely, it should be really like a big positive for in terms of regulations. But I'm for it. I just would like to obviously see more and more users understand the value of benefit of things like decentralized lending. How could I use actually the protocols that most of us in the space actually understand and use?
Yeah. Do we have any dissenting opinion on CeFi from Jarek or Vineeth?
I can go next. I'm in the middle. So on one side, what's actually important to the user is the end experience. So when you buy a laptop, you are not so impressed that it's running on a Gen 2 with some super duper compiled operating system. What you're concerned about as a typical user, you open it and you want it to work because you have something to do, right? And in that sense, centralized exchanges and centralized services filled a very important gap, which provided the services that many people needed. However, on the other hand, unfortunately, it also invited a lot of very bad actors, and we know, like our friend Sam, probably is going to spend a little of time the market, which is very good, but then we have, FTX, we have Celsius, we have BlockFi, and an endless list of the actors who all abuse this trust. And that's not only the abuse of the trust, because if people actually would understand, and some people do, of course, right? But majority, in my opinion, doesn't. What actually happens when your dollar lands in BlockFi or in Celsius, and what's the liquidation procedure? What's the value of your dollar? What they can do with this dollar? They probably wouldn't look at this product the same way. And I think the goal of decentralized finance is to bridge this gap between the usability, so we have the same level of experience, and we don't have to rely on the trust. And I think, frankly, we are just at the beginning of the beautiful journey, right? We are all early adopters. And in my opinion, the world is going to look very different in 10, 20 years.
Yeah, and one thing that I'd kind of like to add to this is, like, I don't think CeFi is inherently like good or bad. It serves a role, and it serves its role relatively well in traditional financial infrastructure. Where I do have a little bit of an issue is with a lot of these like DeFi companies, such as Celsius, Voyager, and these other guys, trying to set up DeFi companies that replicate the business model of CeFi. And so it's like, why exactly are you utilizing this blockchain or this new technology stack to try to replicate things that are taking place in your old world? Because, like, you know, an interesting analogy that I've always seen, at least between crypto and, let's say, traditional tech companies, is we had the ICO boom in 2017, which was very analogous to the dot-com bubble in the early 2000s. We had the DeFi bust when all of these over-leveraged people were blowing up in 2022, which was very analogous to the 2008 financial collapse in the United States. It's kind of interesting how, like, we're doing the same problems that a lot of the people have already done in the past through either finance or through tech. And so for me, it's more so like, I just want people in the DeFi space to, like, you know, focus on what can we do here that's unique, as opposed to trying to rebuild an older business model within the DeFi space without actually utilizing any of the benefits of the technology.
Yeah, so, I mean, differing relationships on how ingrained CeFi should be. Do we see this as the best path to get TradFi in? Because when we think of TradFi money, it could be, you know, spot Bitcoin ETFs are on the way. And, you know, we've got a bunch of those from Fidelity and BlackRock and all them. It could be, how do hedge funds get involved? Are they going to have to custody their own money? Do they even want to do that? You know, do they have the foresight now to know if they will want that in the future or not? I mean, what are the best ways to get TradFi involved? And, you know, do we start with CeFi for that? Should we get these people straight into DeFi? Do we need to change DeFi to get them in?
Yeah.
Anyone
can I start with this one? Yeah. So I think that's a very good point, actually. I think there will be a new wave of, first, actually, the blockchain tech stack itself is improving in some aspect. One important question here, how to get a better key management solutions, how to get better access points, things like digital wallets or crypto wallets. And you see a wave of not actually CeFi, things like non-custodial solutions. The idea here is you're still using DeFi rails, and you still have ownership of what but you don't actually know that you're actually using crypto wallets. And these solutions are improving. The idea, so you get the keys that are encrypted. Obviously, it's somewhere in the middle. Again, in purest DeFi concept, is they are not, you know, they might have some critiques against them, but that's probably the next wave, is to actually see, instead of CeFi, just better wallets and better access points for DeFi.
I think the premise is very simple. You go to a centralized exchange, you type the password in, you confirm your email, you type your two-password authentication, whatever, you send your iris. Doesn't matter, right? The security of the funds is based on the cryptography, right? That's the most important thing. You are already, when you're using centralized exchange, you are using cryptography. The centralized trading, the centralized assets, the centralized asset exchange is cryptography on steroids. So the only missing part, in my opinion, and I come from extremely cynical background. I've worked with traders every day for the 10 years before Cardano, and you won't see more ruthless and straight shooting people in the world, like in my opinion. And the only thing they care about is, does it solve the problem? And the problem is they can make money with this. Many people who actually trade Bitcoin, they don't even know what Bitcoin is, right? But they will definitely care about is, can you hold the asset secure? Can you trade the asset fast? Do you have fast settlement? And by the way, you know, traditional exchanges settlement like 1-3 days, right? On the blockchain, it happens much faster, right? So there is a lot of already advantage. And by the way, before SBF, I had calls almost every day for a period of time. Hey, Jarek, how do we get into the crypto, right? And it was very exciting opportunity, and people see a lot of value both in the trading in the market and also holding their own assets in the market. And unfortunately, we are now in the pause between the excitement, and that's why the saying comes that from the bear market, the best ideas come, because only the best idea can thrive in the bear market. And my personal opinion is you can solve all these problems much better than they already solved. Imagine for a second, you create a wallet as a company. You onboard your risk management of this wallet. This risk management desk sets the perimeter for the trading desk. And this trading desk, they can very easily visualize the risk profile on the blockchain, right? And then auditor, they can have 1 second auditing. Yeah. This is opens so many opportunities that people not even dreaming they exist yet, right? So we are basically replacing, like 10 years ago, the lack of website security, sending everything in plain text, to encrypting it. We are replacing typing your password into the authentication, right? We are replacing this with proper cryptography where you know your assets are safe because the cryptographic perimeters protects that. So your money is better than gold. It's not only protected from chemical reaction, it's protected from all bad actors.
Blackout events.
Yeah.
The one thing that I would say is in regards to, let's say, TradFi getting into the crypto space, I think this is going to be a very slow process because I think for a lot of these traditional financial institutions, like, they're not good at being tech forward. They're not very good at even managing their own internal centralized systems a lot of the time. Because like my old boss at Paxos, he was telling me about how when Citibank became Citibank, they acquired 68 other different companies to become this larger Citibank conglomerate that they are today. And each one of them had their own back-end systems and back-end services. And they had to figure out how to kind of jerry-rig all of these different things together, which proved to be incredibly painful. They're all being run on COBOL code, which most programmers don't even know how to program in. So I think it's going to be like very slow for them to like fully understand what the benefits are that the tech actually provides to them. And I think, you know, with the ETFs and everything, I think it provides a good half measure for these financial institutions to get in. Because I think right now, like the big reason why, which I don't like that this is the case, but I think the big reason why there is interest in crypto is it's a speculative asset and it tends to be relatively volatile and people are interested in taking part in some of that upside. And so for the ETFs to come forth, I don't think that it's going to add to anything in the DeFi space, but I do believe that if there is more, let's say, retail capital that comes into the crypto space, there's additional funding that's available for people that actually understand DeFi to be able to build out better applications within the space. But from a, let's say, a TradFi technical perspective, there are elements within, let's say, crypto technology that's not entirely DeFi that I think that they should be really looking into in regards to benefiting their own internal stack. So like one of the things that we were talking about, and this was way back in the day, was like HD wallet infrastructure for custodians. Because right now, like if you've got a large global custodian like JP Morgan, HSBC, or Citibank, they've got a whole bunch of various sub-custodians. All of those are run on different systems. They've got to reconcile now between their sub-custodians. They've got an army of 20 or 30,000 people, you know, in the back just trying to make sure that everything lines up. And like this, I wouldn't really consider this to be crypto, but it is elements of crypto that they can use to benefit their own tech stacks by implementing this HD wallet infrastructure. And I think through these, let's say, smaller steps, this allows for financial institutions to get more comfortable with the technology and then maybe make their way over to DeFi. But in my opinion, I think we're still maybe even like a decade off before you see more traditional players enter the market.
So I'm going to zoom in on one particular synergy with DeFi and TradFi, and that's RWAs, real-world assets. So I'd like to hear a hot take on RWAs. What's your maybe controversial opinion on that? And you know, that could be anywhere from treasuries to private credit to houses. And I'll add the caveat for you, Vineeth, that I know you have this background in stables. You know, how do RWAs maybe tie in with those as well? So whoever wants to jump in first.
Oh, let me jump first. Yeah. So I'll start from stables because it's the easiest. There are only two things you all need to know about the stable coins. They're not stable, they're not coins. That's it, all you need to know. But talking about the real-world assets, It's actually a very interesting field because that's like the field where we see intersection of the traditional approach, how important it is. Because, correct me if I'm wrong, but are carbon credits even like regulated, how you calculate them? As last time I've checked, they're not, right? So you could potentially integrate the sensor networks into the measuring the credits in real time and giving them the market immediately, which is amazing. Like if you consider the crude oil, like it's being traded actually was on the ship, right? When it's docking in the port, it's already kind of like too late to trade, it's already bought, right? So the same thing can do like in real-time trading, more assets can be available automatically. However, we also need good standardization for that. We need good infrastructure for that, and we need very good legislation for that. And that's always very challenging for the three things to come together, but whoever is going to figure it out the first, they're going to be the first global digital market. And I think it's a very exciting opportunity, and I will only give one example, but I believe it goes for all the asset classes.
Okay, yeah. So yeah, RWAs is everyone is talking about RWAs these days. I think the number here is like 5 trillion by 23. That's by some estimate. I'm not sure even if that's a big number. The global revenue of financial services last time I read is like 300 trillion, and the infrastructure of actually that financial services is like 2%. There's certainly a lot of value could come from real RWAs, and generally speaking, the easiest one besides stablecoins to adopt is surely money funds, private debt products. But there are other challenges, like if you want to tokenize like real estate, then you start to depend on external factors to be able to make sure that the status of this contract agreement is actually up to date, and that basically poses new challenges for DeFi itself. It starts to sound like, okay, you're building an entire new financial system the old way on DeFi. So yeah, like Eric said, I agree. There's a lot of new infrastructure, and whoever figures this out first, if you come up with some solution like decentralized Oracle that allows you to depend on decentralized methods to actually trust this external agreement, it sounds like a bit, it's like a fantasy, but might actually be something that lead to some more, better solutions in DeFi.
I think one thing with real-world assets is just because you can tokenize it doesn't mean that you should. Like, in my mind, there has to be some kind of value prop that's added for you to be able to tokenize things. And the biggest one that I keep getting tossed out is it adds liquidity, or you get to be able to trade it in the secondary market, so on and so forth. But a lot of these things that people are trying to tokenize for real-world assets, they're designed, or basically the current incumbents have a system set up where it's more beneficial for it to not to be liquid than it is for it to actually be liquid. And so by you just tokenizing it doesn't mean that you're going to just immediately bring liquidity to this end asset. So like, for example, back at Paxos, when we started off with gold, the reason why we picked gold over, let's say, other precious metals or anything else was there was actually an inherent problem that existed with, there's another RWA, which is risk-weighted assets. So after the 2008 financial collapse, basically you have a certain amount of your balance sheet that is deemed risky versus unrisky, so on and so forth. And so like if you owned, let's say, 1,000 ounces of unallocated gold that was held by JP Morgan, you're actually not guaranteed that gold. And if JP Morgan goes bankrupt, you're waiting in line with the other creditors. They're going to liquidate the estate. And at the end of the day, you're going to end up with something that hopefully resembles the value of that gold. So what we wanted to do at Paxos was there was a way for us to be able to trade allocated gold in the same way in which you could trade unallocated gold. So we took in a gold block, we tokenized the individual fine ounces of it, and that allowed for that to be tradable. But the biggest value prop for all of this was not qualified as a risk-weighted asset on the balance sheet of JP Morgan, which actually allowed for us to provide benefit in that way. So it wasn't really the liquidity problem that we were solving, it was more so just the categorization of this particular asset. And so for me, like, for example, carbon credits, I actually think could be a really interesting play. My issue right now with the whole carbon credits market is it's basically, hey, look, I've got a bunch of trees over here, and if you pay me money, I won't cut them down. Like, that seems like more of a hostage situation than it does an actual way of, promoting a green environment. But like, for me, like the biggest thing was like, how do you actually measure the carbon, so on and so forth. There was a project that I was doing some consulting work, which they had carbon sequestration crops. So before a growing cycle, they would go take core samples. After it, they would do the same, combust it in a lab, and actually calculate the carbon content and issue a receipt. If you guys are familiar with the Australian carbon credit units, this was actually a really good methodology for that. And so, like, for me, from a tokenization perspective, where I thought Cardano could really fit in is you could tokenize those carbon credit receipts and have those move throughout the system. Because, like, on the other end, you can see who's actually originating it. You can have the receipts attached to it. You can see how it moves through the system. And at the end of the day, like the same way in which you can mint and burn USDA, you could do the same thing for the carbon credits. So if I'm Microsoft and I'm like, I bought $30 million worth of carbon credits, you can actually prove that you've burnt those carbon credits as an offtake. And you could have these public addresses available to these larger companies to go, here's how much carbon I've been offsetting, to actually have that be traceable. So like, I think there's an application there for real world assets, but it's not just, again, oh, I've tokenized the carbon and now I'm done. You've got to kind of build out the ecosystem, and it has to make business sense at the end of the day before you actually proceed with the project. And that's where I think things get a little bit more challenging, is people are like, oh, tokenization. And then they kind of stop there, and that's why a lot of these projects that I see tend to have issues in regards to actually growing out as a business.
So I can't see that clock right there. Yark, let me know if I'm wrong, but I think we have about a minute here. So is that what that says there?
Sorry?
Oh, 6 minutes.
6 minutes.
6. Awesome.
Yeah.
So we can get
Done.
into this a little bit deeper. I want to talk about looking forward. What conversations should we be having around DeFi, and particularly around infrastructure? So be totally subjective about this. What is the most important piece of infrastructure to you that should be focused on more, whether it be oracles or wallets or programming languages or any of that?
Do you want me to start?
You start. Yeah.
I'm extremely biased. I've built next generation trading protocol.
Yeah.
And for me, what's most important, it's building a mathematical model to express anything we're talking about in a cryptographic manner. And this is terribly boring, I'm sorry. However, when you have that, and by the way, we've done this in Laxo, then you can build a beautiful user interface on top of that, that in my personal view is much better than what you had in traditional finance. And we already delivered that, and I think what you want to end up with is better user experience at the same time with much better and stronger foundation. And when we figure both words, right, satisfying the problem that the user have and improving the building foundation, then we are going to move the world into a much better place. And I don't know, by the way, guys, if you realize how important space we are in, because finance is a building block of the society. Everything we do, every human activity has, we like it or not, cost attached, even charity, right? And solving this fundamentally is going to propel the world to the next generation, same as information age, propel us where we are today.
I think I'm going to repeat this that we always say in every cyclical time of crypto or blockchain in general. Like, we're still early, and this is something we need to emphasize on. I'm also biased. I do have a big faith and believe in this, in the coming, and it's going to take a long time, decade or 2 or 3, for this actually to materialize and to be realized by a lot of people. But in terms of UX, adoption, all of that, the first steps are going to be when people actually use DeFi without actually realizing they're using DeFi. And that's happening on many sort of verticals, actually. So on one hand, yes, you get the access points that we talked about and the improved wallet. But then the second part of that is really, I have a belief about the idea of blockchain itself and being like protocols that is built on this mechanism design that is a much better version of what we had from Web 2, which is being sort of taken over by all this monopoly of big tech. This idea of ownership is still not realized to a lot of people. I think we sacrificed a lot about when it comes to things like privacy. Obviously for the convenience and and other things. Everything now is in social media. We don't own it. And obviously, I'm jumping in between DeFi and Web3 in general, and these two are actually quite very, very related because they are on the same foundation, which I think it's going to be a very solid foundation. Last point I just want to make is about the network architectures in general. I hope we move away from this idea of the blockchain nation or cult mentality. Like people like to stick to one network, and they think this is the network that I'm going to. And there's one issue here is the fact that there's this, we start to see one aspect of it, the network effect, which allow these things to improve and accelerate and grow. But the other aspect of it is things like the switch cost. There's hundreds of blockchain now. I believe in few of them. One of them is surely Cardano. But then I'm just thinking about, this ecosystem is overall need to start to work more together as opposed to all this competition, which is, I dislike some aspect of it in terms of, just being stuck on one architecture or just appreciate there are 3 dimensions about the trilemma of blockchain and everyone should optimize for one, but eventually just come together, provide a better access points, global liquidity and so on.
Yeah, I'm going to take a page out of your book, and I think the biggest thing that's lacking that needs to be implemented is interoperability between blockchains. Because right now, different blockchains are very good at different things, and I kind of find it kind of humorous how it's very tribalistic in the crypto space. You don't see people going, I prefer PHP. It's just wild that people are so driven by my way's the right way. And in my opinion, right, Bitcoin's great for a store of value. Ethereum's great from a smart contracting perspective because Solidity is easy to write in. Cardano with its native assets I actually think is perfect for fintech applications, tokenizing real-world assets, so on and so forth. And the thing is, I don't want to be stuck in one ecosystem because then I have ecosystem risk. There's a bunch of good builders in all of the ecosystems that have built up good packages, good tooling, and everything else. So how can we bring all of these things together? It's like, the Unix design philosophy. A program should do one thing and one thing really well, and it's the goal of an operating system to kind of tie all of these various elements together. Right? I'm not going to watch YouTube videos on a PowerPoint, like Microsoft PowerPoint. It just doesn't make sense. And I think right now the problem is there's too many people that are trying to build too much, let's say, within one ecosystem where it may or may not have been purposely designed for that. And that makes, let's say, operating in a decentralized capacity incredibly difficult. So what I would like to see is, more things that pop up from an interoperability perspective that allows for the blockchain space to scale, let's say, laterally as opposed to stacking everything onto Cardano or stacking everything onto Ethereum, where it's different chains can pop up and you have ways to interoperate between these various ones. And I think that will really drive this ecosystem forward. And this ecosystem is in the greater crypto ecosystem. Because, right, if people want to do native assets and they're chosen to stay within the Ethereum blockchain, they can actually come over, utilize the good elements that we have within Cardano, but still work with the packages and libraries that they're familiar with. So for me, that's my biggest thing is I want to see real interoperability, and I want to see the crypto ecosystem kind of come together because I find it, again, funny that there's these pockets of people with pitchforks.
Yeah, you heard it here first. We have more to build. We're not there yet. We've got a long way to go, and we're still early. So I want to thank the panelists here for coming and sharing some of their thoughts. That's all the time we have. So if you want to come learn more about DeFi, you can come pick their brains after. Thanks, y'all.